So the Retirement Guys Network, I explained that to you a little bit, Jim and Dave. What we're going to talk about today is kind of the retirement savings time bomb and how you can possibly diffuse it. And I always tell people what you most need to know is what you don't know. So hopefully today we'll give you some concepts and ideas that you may not be familiar with so that you can make better decisions going forward. Most advisors, I would say almost all of them, are pretty well equipped to accumulate money. Distribution is the key, because now that the money's accumulated, taking it out comes with that a lot of tax consequences. So we've got to be very careful that that money's distributed. So that's what we do. Now that you have it, we want to make sure you keep it and you get rid of it in the most tax efficient manner. That's the most important thing. We call it the team approach, where we talk about tax, estate planning, asset protection, and money management. So what we try to do is combine all those together so that we don't let anything fall through the cracks. This is the U.S. debt clock. So what this is, you can go on the internet and type in www.usdebtclock.org. They're bankrupt. Okay? We live in a bankrupt society. There's more money going out than there is coming in. Our two presidents did that. We've got a financial market bailout, AIG, Morgan Stanley, all of those companies. U.S. automakers, GM and Chrysler, we had that all up, and there's another $4.5 trillion that we add on. So who's going to pay for it? You and I are going to pay for it. And how are they going to do it? Well, as I was talking to somebody earlier about, here's the marginal tax rates for the highest brackets. Look where we are now. We're at 35%. Historically, that's the lowest it's ever been. Those tax rates really hit folks that are earning over $32,000 pretty hard. So we've got half the population that's really not paying much in taxes, and the rest of us are carrying them. At 70.5, what does the government force you to do? Exact RMDs, required minimum distributions. You have to take them out. So this is what we find becomes a problem for folks, is that you've now reached 70.5 and you've got to take money out that you may not necessarily need to live on, but you have to take it out because the government wants their money. We believe there's a tax continuum and that we've got to be pushing money always in the right direction. Fully taxable, tax deferred, or tax free. We think there's really 5 things that you need to really concentrate on doing. We think that every account that you have should be designated for a specific purpose. So if you know what it's for, then we're going to use it for that, and we're going to succeed or have a higher chance of success. We think that people really ought to take a look at controlling their future IRA tax liability, because it really is a time bomb. If your accounts grow, you're going to pay at a higher rate. Use the tax laws to increase your children's and grandchildren's inheritance. If you do it right, you can really do some fantastic things for not only you, but your kids and potentially your grandchildren. Review and update all financial accounts and beneficiary forms. This is very, very important. It's overlooked, I would say, by 99% of the advisors out there. And cut your long-term care expenses if you can. The number one risk to everybody's money, whether you have a big pile or a little pile, is an adverse healthcare consequence. If you have a cohesive plan, you shouldn't be worried about your investments. We want you to make good tax decisions every single day that we're working together. And let's have a conversation. All we'd like to do is consult with you and see what's going on and see if we can help you. Because our action plan is based on creating an income for life, reducing taxes, maximizing your estate to your heirs, and protecting you from nursing home expenses. If you don't decide to do something differently in the first 72 hours, you're not going to do it. So let's chat. See if we can improve things. I hope you enjoyed the seminar. I hope there's a lot of good information. I look forward to seeing you all and having a conversation. Thanks.